Crypto prices are telling us that there's a storm brewing if it's not already here, so the sensible thing to do is to batten down the hatches. But what exactly does that mean for market participants in the cryptocurrency space? What action can and should you take to preserve your wealth? Increasingly it looks likely that the U.S. Federal Reserve FOMC will be increasing rates by a minimum of 0.75%, with 1% being a distinct possibility. Crypto investors have never before been so fixated on the price of borrowing money, or at least not when it comes to the old type of money we know as fiat. The circulation of goods and services of course depends on wheels of commerce being oiled by a plentiful supply of liquidity. But too much of that liquidity in the wrong places can cause problems, and one of them is inflation. Inflation is the most obvious sign of a malaise that crypto adherents will be quick to shout "we told you so," all that funny money just put off the crisis. But the storm is such that it is and will envelope all before it, including cryptos, so how to prepare to weather it? The first rule of investing applies to crypto too: don't realize your losses by selling. We will moderate this later, but as a general rule don't sell unless you have to. For sure your favorite portfolio management tool will be flashing red. But if you are happy with the case for investing in all of those coins you hold, then stop firing up the app on the hour every hour and give it a rest. Maybe turn off some of those watch list notifications too. As he often does, legendary investor Warren Buffett sums it up nicely: the first rule of an investment is don't lose money. And the second rule of an investment is don't forget the first rule. Another useful adage to be cognizant of at this juncture is the ultimate folly of trying to time when to enter and exit the market. The normal practice of the herd is to buy at the top and sell at the bottom. The smart investors do the opposite: they try to buy at the bottom, or at least when others are fleeing the market and decimating prices, and selling at the top. That is not to say that you should sell everything, go into cash and then wait for when you think the bottom is in. Even Wall Street's finest can't get those calls right, and they charge you top dollar for their active mutual funds that claim they can. The best strategy is to stay in the market but to adjust and rebalance, which we talk about further below. Warren Buffett is the classic value investor, and that is one of the reasons why he hates crypto with a vengeance.